OANDA versus XM. Only one takes US clients. Which one actually fits you? Let's break it down.
Before we compare anything else, we have to answer one question. Where do you live? Because if you're a US resident, this comparison is basically already over. XM does not accept US clients. Full stop. OANDA does. In fact, OANDA is one of only 3 brokers on the planet legally allowed to take US retail forex traders. That's not a marketing line. That's the actual legal reality after US regulators tightened forex rules a decade ago and most of the industry walked away rather than comply. So if your address is in the United States, OANDA wins by default. Video's basically over for you at the account opening page. For everyone else, Europe, Asia, LATAM, the Middle East, Australia, the real comparison starts now. And there's one specific number that decides most of it, $3 per standard trade. Hold that thought. Regulation next, because before you send anyone your money, you want to know who's watching them. This is where OANDA pulls ahead hard. It holds 2 so-called Tier 1 licenses, the FCA in the UK and NFA/CFTC in the US. Tier 1 basically means the toughest financial regulators on earth, the ones with the deepest audits, the strictest capital rules, and actual government-backed client money protection behind them. On top of those 2, OANDA is also regulated in Australia, Singapore, Japan, and Canada. That's a wall of oversight across every serious financial market. XM has one Tier 1, ASIC in Australia, plus SISEC as its main European regulator, and lighter licenses in Dubai and South Africa. Both are legitimate, neither is a scam, but here's the mechanism that actually matters. A Tier 1 license means your money sits in a ring-fenced client account, audited on a quarterly cycle, and if the broker ever collapses, there's a compensation scheme that pays you back up to a real dollar figure. OANDA sits inside 2 of those systems. XM sits inside 1. Day-to-day safety? Comparable. Worst case safety? OANDA gives you more of it. But regulation doesn't tell you what you pay. Fees do. And this is where XM starts fighting back. Quick vocabulary first. A lot in Forex is the standard trade size, 100,000 units of the base currency. That's what all these cost numbers are measured against. On the raw spread accounts, the ones active traders actually use, OANDA Core charges 0.1 pips on Euro USD plus a $5 commission per lot. All in, about $10 per standard trade. XM's Zero account? Same 0.1 pip spread, but $3.50 commission per side. All in, about $7 per trade. Same currency pair, $3 cheaper on XM. Doesn't sound like much, but run the math. A day trader doing 20 lots a week is paying $60 more per week on OANDA. Over a year, that's roughly $3,000 in extra cost. Same execution, same pair, just a tighter commission structure. Now the commission-free standard accounts. XM Ultra Low sits around 0.6 pips on Euro USD. That's roughly $6 baked into each trade. OANDA Standard is closer to 1.4 pips, about $14 per trade, more than double. So on the beginner-friendly commission-free accounts, XM isn't just narrowly cheaper, it's meaningfully cheaper. Real dollars per click. Platforms next, because a broker isn't just its price, it's what you actually click on every day. Both brokers give you MetaTrader 4 and MetaTrader 5, the 2 most common Forex trading apps in the world. Standard equipment. Where OANDA pulls ahead is everything sitting on top of that baseline. It plugs you into TradingView, the charting tool most modern traders actually prefer over MetaTrader. It gives you its own proprietary platform on desktop and mobile. And, this is the big one for a very specific type of trader, it gives you a full public API. Translation. If you can code, you can build your own automated trading system that talks directly to OANDA's servers, sends orders, pulls prices, manages positions. It's genuinely the gold standard for retail Forex APIs. XM gives you MetaTrader 4 and 5. That's the whole list. No native trading view, no public API. For most retail traders, MetaTrader is completely fine. That's what most strategies run on anyway. But if you're an algo developer, or you live inside TradingView charts every day, OANDA is the only real choice here. Research and education is where the 2 brokers stop competing and start doing genuinely different jobs. OANDA runs an in-house team of professional macro analysts publishing daily commentary, the kind of research an experienced trader reads to figure out where the dollar or the yen might move this week. It's serious, it's dense. It assumes you already know what a central bank meeting is. XM does the exact opposite. It runs structured beginner courses plus live webinars in over 30 languages. If English isn't your first language and you're trying to learn Forex from scratch, XM is one of the most accessible brokers on earth. So this isn't a winner and a loser. If you're an experienced trader who reads macro, OANDA. If you're new and you want someone to teach you the basics in your own language, XM. Same category, opposite audiences. Minimum deposit. Barely a data point, but worth 20 seconds. OANDA has no minimum. XM asks for $5. Both effectively zero. Neither is a barrier. Both are genuinely built for small accounts, which is rarer than it sounds. Most brokers push you toward $500 or $1,000 minimums to keep tiny accounts off their books. Not these two. So verdict, remember that $3 per trade gap I flagged at the top? That's the whole non-US conversation right there. If you trade serious size, where spread cost dominates every other factor, XM0 wins on raw cost. And ultra low wins for small account traders who don't want to deal with commissions at all. If you're a US resident, OANDA wins by default because XM literally can't take your money. If you want the deepest regulatory backing, native trading view, or a proper API to build algorithms on, OANDA wins on substance. If you're a beginner outside the US, trading small size, and you want education in your own language, XM wins on fit. Both are legitimate. Both are well regulated. Both welcome small accounts. The winner depends on you. Overall, OANDA takes it on regulatory depth, platform breadth, and US access, the broader broker. XM is the sharper, cheaper answer for the non-US small account trader who wants raw spreads and multilingual support. Pick based on the country on your ID and the size of your account. Those two things decide it.
OANDA wins overall. XM fits non-US small accounts wanting cheap spreads. Full breakdown in the description.